If you had a legal need, you'd of course hire a lawyer. And when you did, there would be certain things that you would know about that person right away. For instance, they have been to college, and beyond that, law school. He or she has also passed the bar exam because, well, in almost every state, these are all requirements to be licensed to practice law. And if you were to look at the financial statements for a publicly traded company, you will find in those statements an auditor's report giving an opinion as to whether or not those statements are accurate. And that report will have been prepared by a certified public accountant, probably a lot of them. And again, being a CPA is a profession that requires a college education, the passing of an extensive exam, and in many states, the fulfilling of some amount of professional experience. So how about the person who is providing you with financial advice? What is required of him or her? Well, that person probably needs to be literate. Stay tuned, everyone. Why your advisor should be a certified financial planner professional coming up. Hey everyone, it's Jeff Drayton, Certified Financial Planner Professional and founder of Jeffrey A. Drayton Financial Planning and Wealth Management, LLC. My last vlog was on fee-only financial planning, and in it, I said that in seeking financial advice, there are, in my opinion, really only two sources of advice that is truly bad. One is a compensation model for your advisor that encourages him or her to make one recommendation over another, thereby tainting that advice. In other words, conflicts of interest. That was the topic of my last video, hire a fee-only financial planner. However, what is the other source of bad advice? That would be incompetence on the part of your advisor. This comes from hiring someone that either has a lack of training, lack of experience, or both. This could result in him or her not having the knowledge or skills required to truly provide you with sound advice. Welcome to the topic of this video. Today I'm going to talk about the Certified Financial Planner designation and what it means to have the letters CFP following one's name versus simply being someone who is holding themselves out to provide financial advice. In other words, the difference between someone who is a Certified Financial Planner professional versus someone who is not. So to get started, I'm going to first talk about what the minimum requirements are to be in the field of providing financial advice and to hold oneself out as a financial advisor. Most people who are in the business of providing financial advice work for either a registered investment advisory firm, commonly referred to as an RIA, or a broker-dealer. Both representatives of RIAs and broker-dealers can provide financial advice depending on what licenses they may hold. Most typically, investment advisor representatives of an RIA will have, at a minimum, what is referred to as a Series 65 license to be an investment advisor. Since broker-dealers are also in the business of selling various securities, they are required to have a Series 7 General Securities Representative license and will also likely have either a Series 63 Securities Agent license or a Series 66 Combined Securities Agent and Investment Advisor license. Obtaining any of these licenses is accomplished by passing the appropriate series exam, which are administered by the Financial Industry Regulatory Authority, commonly referred to as FINRA. So that which is guaranteed by working with an advisor who has the appropriate series license for the position they hold is they have passed the FINRA exam for that license. That's it. There is no guarantee of this person's education level. There is no education requirement for any of these exams. There is no guarantee of a person's experience. Once a person has passed any of these exams, there is no additional experience requirement to then hold that license. Now, to be fair, these are not easy exams. Some, like the Series 65 Investment Advisor exam or the Series 7 General Securities Representative exam, are 3 or more hours long. However, they are also a long way from insurmountable. For the Series 65 Investment Advisor exam, which again is the only license one needs to begin working at a registered investment advisory firm and begin providing financial advice, industry expert Michael Kitces suggests in his blog that most will take 2 to 4 weeks to study, spending about 20 to 30 hours, and pass the exam with its required 72% passing grade. So one could conceivably come straight out of high school, study for about a month, and presumably pass an exam which would then make them fully qualified to begin advising clients on how to best manage the savings they have spent their lifetime accumulating. So how does that compare with what it takes to become a certified financial planner professional? Well, according to the CFP board, the governing body that sets the standard and owns the CFP mark, certification is achieved via the 4 E's of the certification requirements. These are education, exam, experience, and ethics. Starting with education, a certified financial planner practitioner is required to hold a bachelor's degree from an accredited college or university. In addition to this bachelor's degree, one will then need to complete the CFP board's own registered program of financial planning coursework. Currently, there are over 300 institutions that offer programs that fulfill the coursework requirement, all of which have a similar curriculum set by the CFP Board of Standards. The CFP Board states that the average time to complete this additional coursework requirement beyond one's bachelor's degree is approximately 12 to 18 months. Once one has fulfilled the coursework requirement, they are then ready to register and sit for the CFP exam. The CFP exam consists of 2 3-hour sessions and is taken in a single day. The CFP board makes this exam available 3 times a year, typically during an 8-day testing window during the months of March, July, and November. The pass rate for this exam varies from year to year, but is normally around 55 to 60% of those that sit for the exam, meaning somewhere between a third to half the people who take the exam fail. A point about the Certified Financial Planner exam. With only a few exceptions, one is not allowed to sit for the CFP exam unless he or she has first completed the CFP coursework fulfilling the education requirement. In other words, it is not possible to have passed the exam without first having received the education, and neither the education coursework nor the exam itself is sufficient on its own to meet CFP certification requirements. This is actually quite similar to other professions that require a high standard for certification. For example, the 2 professions that I mentioned in my intro, attorneys and CPAs, both need in almost every case to have fulfilled an education requirement, law school in the case of attorneys, an accredited program in accounting for CPAs, and they both then need to pass an extensive exam following that education, either the bar or the CPA exam. One might see this as a 2-part authentication process. Neither the bar nor the American Institute of CPAs is willing to accept simply having completed an education requirement or having been able to pass an exam as all that is required for certification. Requiring both is an acknowledgement of the limitations of each. Yes, one might have been to school, but that doesn't guarantee that they actually mastered the material that was taught. Yet, there is also no way to have an exam that is extensive enough to ensure that all areas of expertise, areas that literally required years of study, will be covered. To be an attorney, to be a CPA, and to be a certified financial planner practitioner, you need to do both. The last 2 requirements for CFP certification, experience and ethics. Once a certified financial planner candidate has completed their education requirement and passed the CFP exam, they are still not allowed to begin wearing the CFP designation. First, they must complete an experience requirement. And to fulfill this requirement, that CFP candidate must have 6,000 hours of professional experience related to the financial planning process. This will likely translate into approximately 3 years in the field of providing financial advice. Lastly, all certified financial planner professionals must agree to the CFP Board of Standards ethical requirement. This includes committing to act as a fiduciary, which means if one has the letters CFP with the registered trademark sign following their name, they have committed to acting in the best interests of their clients at all times when providing financial advice. So there it is. The difference between working with a financial advisor who is a certified financial planner pro versus one who is not is the difference of having a guarantee that your advisor has years of higher education, has passed a rigorous exam that washes out approximately a third to half of the people who attempt it, has years of experience in the field of financial planning and advice, and has committed themselves to a fiduciary standard of putting their clients' interests ahead of their own. So here's a question. Why would anyone choose not to make that a requirement of the person advising them on their financial life? Here's another question, and it's one you might be wondering. Why is the CFP designation not simply required of all persons in the field of providing financial advice? There are approximately 1/3 people in the United States who call themselves financial advisors in some capacity. Of those, approximately 65,000 have the Certified Financial Planner designation. That's about 1 in 5 or 20%. Attorneys and public accountants have determined their professions to be of such critical importance that they require a high standard just to enter those fields. They limit the ranks of those who can legally perform those services. Why isn't it the same for financial advice? Couldn't we simply require all financial advisors to be CFP pros? I think to understand the answer to that question, one needs to understand how the vast majority of financial advice is given in this country and what the vast majority of financial advisors truly are. They are salespeople. They are trying to convince you to buy a particular product or investment. My first job in this industry was working in a position that was very much like that. My starting salary? I didn't have one. All income was strictly on commission. If I had no sales, I had no income. And the roots of my company were in insurance. To sell insurance products, in addition to any of those series licenses that I mentioned earlier, one also needs an insurance license, which is to say, a license to sell insurance. In most states, this is called a producer's license. If you look at your state's Commerce Department website, that is probably how it is listed. Insurance salespeople are called producers. And this makes perfect sense. They are the sales force of the company. They produce the revenue. My guess as to why the financial services industry would never want a requirement that people who provide financial advice have the education, testing, and ethical standards of the CFP designation is because for so many companies and for the people they hire, these are basically sales jobs, and sales is a high turnover profession. If you had the need to be constantly hiring new workers in a high stress, high turnover field, would you then want there to be a requirement that your pool of potential employees need training and a certification that takes a half a decade or more to achieve? Furthermore, if what you're really hiring for is a salesperson, do you want someone who is dedicated to the type of objectivity and impartiality that is at the heart of the CFP ethical requirements? Have you ever been to a car dealership and had the sales representative tell you, "I'm sorry, I don't really feel that we have the type of car that would best suit your needs. You want one of our competitors' cars. They're down the block." That's generally not how sales works. While in my sales job, I once had a colleague who knew I was working to achieve my Certified Financial Planner designation, tell me, "You know what CFP stands for, don't you? Can't expletive produce." In my current position, such a comment would not faze me at all. Minus the inappropriateness of it, I would even say it's accurate. Producers are salespeople, and there is nothing in the Certified Financial Planner curriculum, testing, or ethics that would prepare a person to be better at sales. As a Certified Financial Planner practitioner, nothing I do in the financial advice I provide has at its focus the intent to sell a client anything. And if the advisor you are working with has the letters CFP with the registered trademark sign following his or her name, neither too should they. I'm Jeff Drayton. Thanks for watching. Hey everyone, as always, nothing in this video is meant to be specific advice for you. Advice like that can only be had by working with a financial planner, someone who knows you and your situation. In seeking advice, I would encourage you to speak to someone who is a certified financial planner. This is signified by the letter CFP with the registered trademark sign following his or her name. I would also encourage you to work with a fee-only financial planner. That's two words, fee only. Not fee-based, not fee plus commission. Both of those terms mean that the planner or advisor can receive commissions and is therefore not free of the conflict of interest inherent to commission sales. Again, I'm Jeff Drayton. Thanks for watching.